Oh,
Oh man, I'm jealous.
same
Bob
here.
Gorman just joined, Jennifer.
Oh, okay, perfect. So then we're just waiting on John, or we'll get started without him.
Alguer said that he's trying to log in.
Oh, they said they've seen him. You said Al is on the line, Sherry?
I saw him come in, yeah.
Okay, he said he's trying to log in. He's texting Bill.
He was there for a minute, but I don't see his name anymore.
Okay, maybe he, technology.
I hasn't figured this out yet. I mean, they did FaceTime first, right? How come you can't group FaceTime?
I saw his name, but I do not see it any longer.
Some people have Android. Can you FaceTime through those?
You have to use Google Duo, but that works on iPhones.
They should.
My daughter had an Android and we have Google Duo from college.
They should get an iPhone like everybody else. I mean,
You can use
give up.
your iPhone.
You can't fight it. Just give
Google
it.
Duo with Androids.
Mm-hmm.
There's Al, he just joined back in.
Okay, so we have Al. The only one we're missing is John?
I think so.
Okay. Mr. Kuznow, if you would like to start the meeting, it's up to you.
It's up to me. I'm the chair.
You are. You are, and you were sworn in by Mr. Gleason before the meeting, so you are legal.
I'm legal now, huh? Okay, well, I didn't realize this was up to me, so you caught me off guard.
I'm sorry.
Okay, so we'll call the meeting to order. Roll call, please.
Alguer,
Present.
Brandon,
Here.
Quartz, here, Cousineau,
Here.
Galida,
Here.
Gorman,
Ooh, look at
No.
that.
I thought Bob was on. Maybe he, oh, he's
Yeah.
muted. Bob's muted.
Yeah, Bob, unmute yourself to speak.
I wonder who's got the beach view.
I just did it for you, Bob. You should
Backing
speak it now.
Gorman,
Trying to load his bow.
Bob, if you're in the building, you can come to the conference room.
should I move on?
Bob, if you're in the building, you can come up to the conference room in 301.
No, I think he's working off site.
Okay, okay.
So we
And,
all set or,
And Potberry. I was just waiting to see if Bob was gonna chime in.
all right, so we're gonna wait a minute or two yet?
Bob's in so low.
Should I just put
I see
Potberry
his
in?
name. I see his name. I've unmuted him, but I'm not sure if he has audio issues.
Okay.
Bob, are you with us?
Missing the bow, Bob.
Let me know when you're ready to go forward.
I think we have enough even without him if he joins in, so if you want to go ahead and continue with the roll call.
Oh, I finished roll call.
You're all done with the roll call, so
I'm
we have
done
a
with
quorum?
Correct.
Okay. Did we receive any public address or any public comments in writing or in voicemail?
We did not.
Okay, so communications, I was sworn in. Approval of minutes, motion for that.
Move to approve.
Support. Support for Brandon.
Moved by
Okay.
Quartz.
We have to do a roll call on it.
Yes.
Okay.
Go ahead and do that.
Alguer,
Yes.
Brandon,
Yes.
Quartz,
Yes.
Cousineau,
I wasn't here, so I'm gonna abstain.
Valida.
Yes.
Motion passes.
Motion carried.
Old business, there isn't any new business. Investment performance report for quarter ended 3/31/20, presented by and co-counseling attachments. Need a motion?
Oh, Chris, are you on the line?
I am here.
Okay.
All right. So if you want to go ahead a couple slides, I want to say it's slide number 7. Yes, that one right there. As you're probably aware, the first quarter was horrible in the markets. And, we had a decent start to the quarter. So January was actually looking relatively good. And then we kind of had a sell-off towards the end of the month. February kind of looked a lot like January in that it started off pretty good. And the market actually peaked at like all-time highs around the 20th of February. And then kind of the COVID-19 pandemic started spreading very quickly across the United States. So, it was something that we kind of had heard about overseas, particularly in China and then in Italy. And then all of a sudden it was, dead center New York City. And, we actually felt quite a bit of it here in Michigan. And really then, the reaction was to basically shut down the US economy, which actually had been doing pretty well. And so the market peaked on that February 20th time period and then sold off over the next month about 35%. So within 23 trading days, we gave up 35% of value in large cap stocks or the S&P 500. And I would say, an additional 5 to 10% more on top of that in small mid cap stocks. And just to kind of put that in perspective, when we went through 2008 and the great financial crisis, to get to that same mark took us about a year. It was over 250 trading days that it took for the market to decline by that 35% mark. And if you think back of the early 2000, when we went through the tech bubble bursting in 2000, 2001, it also took about a year to get there. So what had historically taken, 12 months to do, we did literally in 1 month this time. And that is kind of the market's reaction to this sudden closure of the economy and all the resulting kind of ripple effects that we're seeing, first in the travel industry and hotels, and then, second kind of layers, kind of retail, and then all of kind of those other support industries. If you think of restaurants and bars, and you can just go kind of down the list of industries that are being impacted by the coronavirus. So on top of that, we actually also had a little oil war between Saudi Arabia and Russia. So not only do we have this pandemic spreading across the globe, at the same time, we have two countries that are kind of flooding the market with oil at the exact wrong time, in that the demand for oil basically went away. So if you think about, the average American who was driving to work every day and now all of a sudden is at home, you was going shopping or going out to eat, or, just kind of being mobile, now all of a sudden stuck at home. We saw gas prices fall to like $1 a gallon, but no one was buying any gas because there was nowhere to go. And so that also kind of weighed on the markets, and particularly the energy industry. So not only do we have kind of all this bad news about, the pandemic, but then also, we have one of our industries here, the energy sector, kind of taking a beating based on the decline in oil prices. So as I said, it was just an awful quarter for equities. And you can see that in the upper chart there. The blue bars are the S&P, or excuse me, are the domestic equities. The S&P 500 actually was, the best performer of the group, and it was down about 20%. And then the international markets, those are the red bars, did a little bit worse. You can see kind of low 20s, depending on the market. And then really the area that got beat up the most was in that small and mid cap space. So that Russell mid cap, you can see it was down 27.
Oh, he's frozen.
And kind of held on to some of those safer names in their portfolio. The one bright spot that we did see was in the fixed income area. And you'll look under those green bars where it says the Bloomberg Barclays US government, it was actually up 8%. So the government's response really kind of helped the markets along in that last week or two of March, and kind of we actually had finished on kind of an upward trend. So that 35% loss that we suffered, we actually had a good start before, and then kind of a little bit of a recovery towards the end, and that's how we ended up only down 20. I say only, but that's a huge number. But as I said, we did see the Federal Reserve step in, lowering rates, and we saw Congress step up and pass the CARES Act and the payroll protection initiative. And so, as I said, you did see some positive results from the fixed income market, particularly on the U.S. government, up 8%. I would point out those corporate bonds, that's the one towards the bottom, the Bloomberg Barclays corporate IG, you can see was down almost 4%, kind of selling off in tandem with the equity markets. So it said only the safest areas did we see positive results during the quarter. And then you can see the full year results right below that, kind of a mirror image of what we saw up on the top there, with the sell-off in equities just kind of taking down all of those gains that we had from last year. And basically teens on the international side. The S&P, once again, kind of the best performer in the group, down only 7 for the last 12 months. And then Russell 2000, those are your small caps, you can see down over 24%, or right at 24%. Fixed income with the positive results. So just a devastating market this quarter, and really influencing kind of all the longer term numbers at this point. I'm going to pause there and see if there's any questions. All right. We can jump ahead to 12. So this is the cash flow summary for the quarter. I always think it's kind of helpful on this fund in particular. We take a look. You can see we started the quarter just about $10.6 million. We actually received a contribution from the county of just over $3 million. We spent just under $4 million. And then you can see the return on investment. That takes into account any income that was generated from investments, as well as the changes in price. And you can see we were down just under $500,000 there. So we ended at 9.4. So that's where the cash flows came through. Jump ahead 2 more, and we actually have performance. I know negative numbers are never fun to see. I will tell you, things could have been a lot worse. So we actually, I would say, somewhat survived this quarter, and we survived a lot better than most of our peers. You can see the fund was down just about 4.5%. Our policy index, and we're changing based on cash flows every quarter, so the policy index isn't necessarily a great representation. You can see that was actually down about 8.5. But I think kind of the more important number is kind of like, what did the average kind of public fund do this quarter? And you can see the average public fund was down over 13%. So we obviously did some things a little bit different than our peers, and it actually helped us this time around. And I will point out, if you look at your 1-year number, we're actually positive. So all of that negative numbers we saw on that chart for the 12-month period, we were able to kind of navigate that to a return of 1.8% over the last 12 months, and putting you in the 4th percentile, which means you've outperformed 96% of your peers over the last year. So I will say, surprisingly, that low vol strategy that we moved into to kind of weather these types of storms didn't really help that much. So it was down about 19%, really right in line with what the S&P did. So we did not get much protection from our equity index. That said, that index by itself was a top 3rd performer kind of in that large cap core space. So a lot of active managers or a lot of other strategies did do worse. But as I said, we did suffer basically market-like losses on the equity side. And on the fixed income side, our manager didn't do a great job there, Telemus. I will tell you, their numbers are kind of where we've seen a lot of managers in that if you had more corporate bonds in your portfolio than government bonds, that's the type of return that we saw. And remember, the corporate investment grade index was actually down 4% versus the 8% positive for treasuries. Really, your mix between corporates and treasuries dictated what your performance was. I will also point out that we have seen a rebound in those corporate bonds since the end of the quarter. And so we've seen quite a few managers kind of outperforming at this point, into the second quarter versus, the benchmarks that have a lot more treasuries in them. And one of the bright spots in the portfolio was our real estate holdings. You can see up 1.4%. So that helped us offset some of those losses there on the equity side. And then the other area where we actually had a significant investment was in cash, which is not shown here, but positive results, basically not much of a return, but it wasn't a negative return or a loss. And so that really helped offset, the downturn that we saw on the equity side as well. Any questions kind of performance-wise? So I do have an April update.
Are we going to liquidate one of those?
Slide 31.
Or I think in G-Search Snap even.
Up 1. So maybe 30. Yep, that one. So I mentioned kind of we had this little bit of a rally to end March and really a really strong rally into April. And we've seen it kind of continued into May, maybe not quite as strong as April's rally, but you can see double-digit returns across the U.S. Spectrum of indexes, so 12% on the S&P. The best performer is going to be that Russell 1000 growth. You can see up just under 15. International, not quite as strong. The developed markets, that's the EAFE, up about 6.5. The emerging markets up about 9. So nice little rebound. Still, when you look at the year-to-date numbers, basically negative across the board. The one that's getting close to getting back into positive territory is that Russell 1000 Growth Index. And just last week, we saw the NASDAQ, which is, a bunch of stocks, generally probably a little bit newer and more tech-oriented, actually got back into positive territory year to date. The one number I did want to point out, and doesn't really influence this portfolio at all, but that if you go across that Russell 1000 growth and Russell 1000 value lines, you look at like the year-to-date number for those, and then the 1-year number. 1 year for the Russell 1000 growth, up 10, almost 11%. The Russell 1000 value, down 11%. They've went on completely different paths over the past year. And I will tell you that is a little bit concerning. We're basically like at a third standard deviation event for this growth versus value return. And so whenever you get kind of that stretched in the performance of those two, you do expect some sort of kind of reversion to the mean to occur. We also saw positive results on fixed income. So that U.S. aggregate, that's fixed income up another 1.8% in the month of April. Really driven by those corporate bonds. So if you look one underneath there, it says U.S. corporate investment grade. That's that IG from earlier in the report. You can see a 5% return. That's the same index that was down the 4% in the first quarter. You can see it's still negative for the 3-month period. But as I said, that's where we saw kind of the performance in fixed income during the month of April. And then if you flip one more page, we have the updated market values. So remember, we ended the quarter at 9.4, we're at 8.9. And really, we've had a, one more month of benefit payments come out. So there's probably close to $1 million that has come out to pay benefits over this period of time. You can see the cash account's about $4 million. That's pretty close to what we'll probably be spending here before our next meeting. So we have no recommendations at this time. We do continue to have our queue in for that Bearing Patriot Fund. So if you remember, just about a year ago, we actually put in our notice that we wanted to redeem from there. And we've been being paid out a little bit at a time over the last 3 quarters. And we continue to expect another payment from them here on the June 30th evaluation date. And with that, I will pause and see if there's any questions. All right. Well, thank you. And as I said, if there are any questions that pop up, feel free to give me a call at any time.
Do we need a motion to pass that now?
Yep.
Make a motion, make that
Move
motion.
Accept it?
Support. Who made the motion? I'm sorry.
Brandon,
Okay, and court support. Got it.
Okay, oh, sorry, you gotta take roll call on that. Vote.
Any
Okay.
discussion? Roll call, please.
Brandon,
yes.
Quartz,
Yes.
Cousineau,
Yes.
Galida,
Yes.
Alguire.
Yes.
Okay, motion carried.
Okay, approval of liquidity schedule.
I'd like to make a note, there's a typographical error on this. The 768,000 here for pharmacy should be 176,877.57. And that would make the bottom number 4,464,535.86.
Okay, is there any discussion? Roll call, please.
Oh, we don't have a motion yet.
I thought we did, but go ahead. I don't, your procedure is a little bit different than I'm used to. So we need a motion and a second.
Make a motion.
Do we have a second?
I'll support it. Anita.
Roll call, please.
Quartz, Quartz,
Yes.
Cousineau,
Yes.
Galida,
Yes.
Alguire,
Yes.
Brandon.
Yes.
Okay, motion carried.
Action item 3, summary of billings expenses through May 4th. Attachment.
That's what we just did.
I didn't see.
Okay, so we're on to legal report.
Yeah.
Yes, thank you. Good afternoon, everyone. I just have 2 brief items to discuss with you today. The first is on a couple legislative updates that we have. The governor has been issuing executive orders seems like every day. She has issued two that are relevant to this board. One is related to the Open Meetings Act and your ability as a public body to meet through Zoom or Google Meet or telephonically. She has extended her previous order through June 30th. So meeting in this manner is still permissible for another 2 months almost. And the other is related to the allowance of electronic signatures and notarizations. So if you have any forms that you might receive regarding a designation of beneficiary or something along those lines, you can allow currently electronic signatures for both of those. That's also extended through 30th of 2020. So those are the two brief legislative updates. One other item I wanted to discuss with you is related to the county board's decision to sort of reorganize what the county controller's office used to be into a new CFO role, which is filled by Crystal Simpson. Your VEBA plan document states specifically that the county controller will be a member of the VEBA board. It doesn't say, county controller or CFO or the director of the finance department or anything like that. So the county board currently has in front of them for the Wednesday meeting two different documents. One is an amendment to the retirement ordinance, which has the same issue with specifically noting the county controller as a member of the retirement commission. And the other document is a request to change the VEBA plan document from county controller to CFO, which would allow Crystal Simpson to participate as a trustee on the VEBA board, just like Nirahu Hemraj did and his predecessors as the county controller. So from what I understand, both of those will be approved at the Wednesday meeting of the County Board of Commissioners. And we can go forward then with business as usual with a full roster of trustees. Only two items that I have for you today, unless there's any questions. That's all I had.
Okay.
Move to accept the report, Kim Courts.
Support, Brandon.
Roll call, please.
Kuzino,
Yes.
Galida,
Yes.
Elquire,
Yes.
Brandon,
Yes.
Courts.
Yes.
Okay, motion carried.
Thank you.
Thank you. I don't see any informational items. No other business. Motion to adjourn.
Support. Move it.
Adjourned.
Have a good day.
Yes, thank you, everybody.
Thanks, everyone.
Hey, thank you. Everyone stay safe.